give more room for policymakers to adjust their monetary policy. Thanks so much, Tracy Chung, for us. And more on this, we're joined by Mr. Chen Jiahe, equity strategist at Xingda Securities. Jiahe, on the inflation side, China's government's target for the whole year is around 3.5%. Now, it appears both consumer and producer prices is under control. How do you read May CPI and PPI data?
Yeah, the data is actually much lower than what you have saw. I mean, you have saw 2.5%, much higher than last month. But the thing is that the biggest contributor to this CPI number is what we call the tail raising effect. Because if you go back to last May, the number was quite low, so you have a very high May data this year. But if you go to the next month, you probably just drop. Because if you look at the month-over-month data, the CPI only rose by 0.1%. Annualize it, that only means 1.2%. The PPI data is slightly better than what we have saw the trough in March, but the growth is very low at the moment. However, when you see the property market is cooling down all across the country, I think I personally feel quite lucky that the PPI is still here.
Right. You personally feel lucky, but what do you see from the market's reaction to the main gauges of inflation? Should investors chair that inflation stay low?
Well, we actually got a pretty quiet market this morning. Well, the reserve requirement ratio has been dropped slightly for some of the very small banks last night. So we have saw the stock market being rising slightly this morning. However, if you look at the stock market right now, it is still quite pessimistic across Asia. If you look at one thing, the Hang Seng Asia and Asia Premium Index, it is trading at 92 at the moment, which means you can buy exactly the same share, about 8% lower the price than if you then compare with what you can buy in Asia. So that means stock market is still very low at the moment. People are not really expecting much things. The bond market is actually quite positive over the last something like 6 months. However, this morning it's been quite stagnated. But personally, I still think bond market is somewhere you want to look at for China, mostly because the economy is coming down in the first place. The monetary policy is not losing at much at all. You don't see a rate cut yet, but they have to if the economy is bad. Also, the 10-year treasury yield is still at a historical high, although it is about 60 basis points lower than its peak, but that was a very historical peak. So currently 4% yield is still pretty high. So I think bond market is somewhere you want to look at.
Right, we'll pay attention to the bond market. Thanks for your insight and your recommendations. Mr. Chen Jiahe from Xingda Securities.